Hello, good morning.
So hello everyone, good morning. My name is Oliver Geider. Welcome to the 9th European Crowdfunding Convention. Slightly different. We are waiting still for one panelist. We hope that he can join us. Once he's there, we will launch, otherwise we do it without him. Just so we are clear on everything, today we talk about trends in the market, what's happening, what is going to happen. We'll touch on, I think, everything that's interesting. The speakers have prepared some questions. Tomorrow we will speak specifically about crypto assets and the regulations from the European Commission, or the proposed regulation from the European Commission. And then on Thursday we will speak about crowdfunding regulation under ECSP, the next steps, and what we are going to expect for the next few years. So for today, I'm very happy that we can welcome a number of market participants from different backgrounds with different ideas. The session will be moderated by Christin Friedrich from Innovestment and Matthias Klaes from the European Crowdfunding Network, if he can join. And then we have Armando Melone from the European Commission, we have Lynn from Seedrs, and we have Liza Aizupiete from Fintelum, who will share their experience. And you will be able to ask some questions on the bottom of your screen. For those that are in the live chat, there is a Q&A session. You can type your questions in there, and the panelists and speakers can see them and then answer either verbally or not. And the chat function will most likely will open later on, once the speakers have gotten used to being here. Without any further introduction, I think I would like to invite Christin Friedrich to join me here, and then also the other panelists. It looks like that Matthias Klaes has not been able to join the session yet, so we would wait until he's here. Christin, would you be able to join us? And maybe the other panelists as well, and then we can maybe start with a...
Hello, everybody. Good morning, and great to see you. And this is very spontaneous. It's always exciting to try out the technical setup. I hope Matthias will join, because he actually was planning to give us some, to set the stage with some data, with some general observations. We will today discuss different topics from ECSP sustainability. We will cross all areas, and I'm very excited to see what you are especially interested. As you know, in ECN, we always try to keep it light and also relevant. And really excited to find also out what you are interested in and which questions you are coming up with. Maybe, Oliver, before we jump into the panel, if Matthias won't join now, we could do the survey to set a bit the stage, because we were wondering, okay, what is maybe your background? We have a lot of ECN members here. We have people, stakeholders from the industry, policymakers, and it's a great opportunity to dive more into and see what maybe your background and interest is. You already launched it, Oliver, right?
Yes.
Perfect.
You told me so.
Now on your screen.
I think you all can see it as well.
A minute, I guess, right? I can't myself.
Ah, yeah, there's a countdown. I see a countdown. Very good.
Okay, we already see quite some platform operators and fintechs, and also research and science. Always great to have you here too. It's very important, especially in a new market like ours, to dive deeper and creating data and knowledge. Okay, I think we can end it now, Oliver, after a minute. So we have this kind of tendency, platform operators and research institutions, especially also investors, policymakers still will come in, I guess. Okay. Let's jump into the next question. Because we also were wondering what topics which you're especially interested in, and so there you will find in the next question a few trend topics we will touch today. And maybe you could choose what for you is especially relevant, so we have an idea. All right, that's interesting. So quite some people also crypto assets, for example, which will be highlighted tomorrow. Best practices by platforms. Would be great if you also from the audience will share. Yeah, co-funding, market consolidation, sustainability. So all kinds of topics we will dive into today. Okay. So. Is Matthias joining, or should we jump into the panel and he maybe just?
I think we should jump. Yes, I haven't seen him. We invited him now to a number of email addresses.
All right, it's the live effect. Okay, perfect.
Yes.
So
he's on Slack, so but I will leave you guys.
Yeah, thank you, Oliver, for setting the stage. We will also. Yeah, have maybe you later in if there are specific questions regarding ECN groups and work. So may Jeff, Armando, and Liza, do you join us on the video stage? That would be great. Because we will discuss today market trends, and as you might know, the one or the other panelists have been around for quite a while in our industry, and it would be nice to look also back, what did we achieve so far, what was the process, and where do we stand today, and where are we heading towards. And we will discuss and start with an introductory round. Hopefully the videos will work.
Christin, I think you may need to enable our videos on the participants.
Okay, so maybe Oliver, you like to ask this. If you guys feel like already having some questions to bring us on the way, feel free to already send it in the Q&A session, which you find here below in the line at the bottom from Zoom. So Jeff is now there. Hi, Jeff.
Hello, everybody.
You in London?
I'm actually in the States just at the moment.
Okay. Different time zone.
It's about 4:30 in the morning here.
Okay, wow. Respect. Thanks for making it happen.
Yeah.
So Liza is coming and Armando. So maybe while the other guys are still setting up the technique, do you want to start, maybe Jeff, to introduce yourself to the audience?
Yeah, absolutely. Hi, everybody. My name is Jeff Lynn. I'm one of the co-founders of Seedrs, UK-based equity crowdfunding platform. I now serve as its executive chairman. We started working in Seedrs back in 2009, the very sort of early heady days of the crowdfunding world, and have been live since about 2012. We've seen about £1 billion invested on the platform to date, across about 1,200 deals. Some of you may have heard that we recently announced a merger with our sort of great UK rival, Crowdcube, and we're now going through the regulatory and other processes with that. Hope to be able to have that closed by sort of Q2 of 2021. You will also obviously be aware that Fintelum considers itself definitely part of Europe. Not my view, but the view of 52% of the population, sadly. But nevertheless, we are a very European-minded platform. We have had offices in Lisbon since our our inception, and in more recent years in Berlin and Amsterdam. We're big believers in pan-European crowdfunding. We're very much looking forward, to post implementation of new regulation and post our own merger to being able to sort of create dual headquarters in the EU and grow from there. So it is a pleasure to be here. I also serve as one of the board members of the ECN and a huge support of the work that Oliver and Christin and everybody do. And thanks very much for having me.
Thank you, Jeff. Liza, do you want to introduce yourself? Welcome from where are you today?
Sure. Good morning, everyone, and good evening, perhaps, to some who are on a different time zone. So I'm Liza Aizupiete, and I run Fintelum.com, which is a new generation cryptocurrency-related crowdfunding platform. Now, we are based out of Europe, Riga, Latvia, the Baltic states, and the new generation consisting in this new twist that we not only are happy to serve our crowdfunding investors in euros, but also reach out to the wider world and accept cryptocurrency as investment, which we then exchange and invest into direct share capital of our project. Now, the other twist to our new generation crowdfunding platform being a blockchain related, we specifically have integrated our own special Fintelum security token implementation on the Ethereum blockchain. And that's something that we are looking forward to having for the wider financial industry, to basically see the transparent registry of, so a poll popped up on my screen, to see a wider financial industry use this type of technology, this or another implementation, of course, with vying to be one of the standards, but to see basically these securities being transparently represented on a blockchain, on a public blockchain. It doesn't necessarily need to be the Ethereum blockchain, but it's most important that it is a public blockchain. That's about it. I'm happy to be here, Christin, in this very unique ECN event. I'm looking forward to your questions.
Thank you, Liza. Hi, Armando. You're here at the moment, right?
Yes. Can you hear me?
Yes. Perfect. All right.
Yes. My name is Armando Melone. I am working at the European Commission on SME access to finance. I am from basically the service which deals with growth, so a sort of a Ministry for Economic Development of the Commission. And we work closely to our colleagues in DG FISMA, who have been working hard to develop I am here basically to reply and provide any views on how we see the development of the market from a purely SME access to finance point of view. We have a perspective of, in general, improving SMEs access to finance, and particularly to alternative complementary sources of finance, where crowdfunding fits very well in this capital markets union overall strategy of the Commission to create and channel more financing outside the banking system for SMEs. And we have been collaborating with the European Crowdfunding Network since its beginning. It's almost now 10 years ago, a bit less, but we appreciate a lot of work of ECN as advocates of a market which is growing year by year. So we look forward for this interesting panel today.
So Armando, we are already at you about sharing the last 10 years. When we start with where do we come from? How did you experience the development of the industry, and also maybe the what do you see, what was maybe key learnings on the way of the US policymakers, maybe to understand how the industry is functioning mindset. Maybe you can share some perspective of your journey in the last 10 years with our industry.
Yeah, actually, we have seen a lot since the last 10 years. I remember at the beginning, like crowdfunding was seen as something very very strange. It was not like a consolidated market, and it took years to actually see the developments and then allow for initiatives that were taken. Actually, the adoption of ECSP has been like a milestone, because I remember years ago where crowdfunding was still too small to merit a proper initiative like that. So I can only say that in 10 years we've seen it as a challenger to traditional financing, as a complement to traditional finance. We've seen many synergies between traditional forms of finance, banks, venture capital, business angels with crowdfunding, and we are seeing now a lot of collaboration. We've seen a lot of institutionalization of crowdfunding with the bigger players. So we've seen that although the crowd is still an important element of it, we still see that the role of private institutional money in it, which is very important, because actually it can add actually more expertise into the whole system. And we've seen how Seedrs is working hard to put forward a new perspective of it, and I'm sure that during the day we will discuss about this. But we have this kind of perspective, and we see as the future the development of blockchain and the tokenization as the next steps. And so I think that this year has been really good because of these developments, and we look forward for what will happen in next years.
Thank you, Armando, for sharing. We can dive maybe deeper in some programs which you are also putting together, helping the industry to grow further. Maybe Jeff, because Armando was already mentioning Seedrs and your work in the last 10 years, what do you think about where we come from and where we stand today?
Well, actually, as initiatives of the Commission, we of course have put forward, and to this year is special because for the first time we have the adoption of first regulation for crowdfunding that has paved the way for, as you all know, the next steps. And so there are of course MiCA that will be addressed tomorrow, the tokenization, which is I would say also the future of that. But the Commission is working not only on that side. We have been investing, thanks to also to European Investment Fund, into crowdfunding portals. In the EIF there is a diversified debt fund service which has been co-investing into several portals in order to channel EU money into the development of the sector as well. That is indeed one of the most interesting to observe, also in view of course of the future development. But we also have the future programs in the MFF, which is the 7-year budget that we have all read into newspapers, that has been just adopted, and InvestEU will be the major financial instruments that will be available, and investing in many types of financial instruments for any types of intermediaries. And we are developing now the products where we hope that new intermediaries will be like crowdfunding portals, could be like among those that could help us in channeling financing to European companies. And we have seen that in the COVID crisis, actually, this was the case in many member states. In UK, the Future Fund has been provided also thanks to the help of crowdfunding platforms. And we have seen that the role of the platforms has been quite important during the crisis. And finally, sharing good practices. I would say that a big role of the Commission could be also to learn, to make a member states learn from each other. We have seen a lot of support programs in member states that have been working quite well. we've seen that in Italy and now in Spain, the European Crowdfunding Network is developing a very good ecosystems, I would say, exercise where the different players in crowdfunding ecosystems have been working together to try and develop the whole system together, and I think we are observing this. That we have a special working group where we see what are the developments in different member states. But I think that member states can learn a lot from each other. So these are the main points where I see the industry developing. But we look forward to work together with you and the industry for the next steps.
Thank you, Armando. So platform perspective, maybe Jeff, what do you think?
So first of all, I mean, I think Armando, summed it up really interestingly from the perspective of sort of government and commission engagement, where we've gone over the past 10 years, from a position in which this was, too tiny and sort of unnoticeable of an industry to one in which there's now a full-scale regulatory regime. And I won't talk too much about the ECSP because we've got a separate panel on it on Thursday. But I do think, we spent years sort of, I can remember the early years of coming down to Brussels and engaging with commission officials and others. And there was always great interest at a personal level in what was happening in crowdfunding. And, many people like Armando, were very keen to discuss it, but to get the institutional will together to actually, do something big for what was such a tiny nascent industry was very difficult. And then finally it became a sort of significant enough, thing that it happened. And I think that's very much representative of the last 10 years. It's been very exciting, I think, for me, certainly to be at the coalface of it over these past 10 years. And I think, we have grown from essentially nothing into not just a sort of credible alternative finance provider, but the mainstream finance provider. I mean, one of the things I'm in the midst of at the moment in our merger with CrowdCube is engaging with regulators to describe, to really describe the market as it's evolved and how things play. And as I've sort of been putting pen to paper these last weeks, it has almost surprised me the extent to which, we now see, certainly in the UK and increasingly across Europe, crowdfunding as being not interchangeable with, but very directly competitive with venture capital, private equity, angel investment, and other sources that were, we consider sort of traditional. So it's certainly been a very, very exciting time. Look, the time ahead is easy for me to talk about the past because I can at least turn to, I know I'm right. It's harder to make predictions for the future. But look, net, I just see continued growth across a number of different axes. I mean, I think everything, there are lots of innovations to come. I'm sure Liza will talk about the blockchain side of things. There's a lot of things in the future. But the reality is that although we've come a long way, we're still very small. This is still a very, very, small part of the overall funding ecosystem. And I don't think that's how it has to be forever. I mean, I think that we can, in time, come to represent as much of the capital flows into small businesses as, say, venture capital does today. And I think that the next 10 years is really about driving that sort of exponential growth. So I'll leave it at that, and then we can dig into some of the deeper stuff later.
Yeah, that would be great to dive deeper also how we can create more reach and grow the ecosystem. Liza, maybe blockchain can play a part in it. Maybe you can share a bit how you came or where you see the synergies and in the crowdfunding ecosystem, how you experienced maybe the last years also where blockchain and DLTs and cryptos had a huge hype and then up and down. And at the moment, everybody's talking about it and we're wondering in the industry, why should we use blockchain, not any database? What is your take on it, maybe where we are heading with this technology?
Well, Christin, Jeff raised a very good point in future being bright, and our task is basically to bring this industry to the fore and perhaps be on a par with venture capital investments or even exceed these. But I would like to mention a historical event of so-called ICOs, or initial coin offerings, which indeed, in a way, sort of propelled this trend even quicker, even further, without anyone realizing it. All of a sudden, with free access, unrestricted access, and even with very little KYC AML access from all over the world, retail investors, all of a sudden, they had access to a plethora of good and bad investment opportunities. But the idea is that they were there. There were choices for retail investors to be made. And all of a sudden, this industry sort of exploded. Obviously, today we are in a different era where the free flow of crypto funds have been curbed by certain regulations, where we simply started to discern more carefully what is a security and what is not a security, and in attempt to comply with the existing laws, security laws, we have seen quite a die down of this activity. However, it is worth mentioning that it was quite a unique period in time in investment space, where retail investor had seen unprecedented access to investment opportunities. It's a different question whether these opportunities were quality and properly presented. But nevertheless, it was a very good experience to have for generally financial industry as such.
But how do you see it at the moment? I mean, where do we stand? Why you choose, for example, this technology, and why should we as platforms look into it? And because there's a lot of debate about the advantages and disadvantages. Why you bet on this technology and believe that is one way to go?
Well, it's not so much the question of technology. If we talk about technology for representing either securities or products or loyalties or some sort of items that represent something else, then yes, we're talking a technology, the way we make it transparent. And one way of doing it is either the way regulated market participants such as NASDAQ keep it on their own books on a more or less closed manner as a central counterparty, or another way is to do it on a blockchain. You still will probably need a central counterparty or several in that matter. And then we make it transparent to the whole world to see. Obviously, that's the technology part. But if we talk about cryptocurrency, it's not really technology in the sense, it's actually simply an alternative monetary system, which allows people, participants from all over the globe to participate in fundraisers in maybe legally more orderly jurisdictions. So for instance, from the African continent or from Asian countries or even in Latin America, people who don't have readily access to euros could actually invest in good investment opportunities here in Europe using cryptocurrencies. So in that sense, this is not a question of technology, it's more of a question of different monetary system that allows unrestricted access to good investment opportunities.
That's a question about the regulation, because at the moment you are operating in an unregulated environment, right? How do you see it when it will become more regulated? Because everything which you described also has as a baseline that you are able to invest cross-border.
So the reason we are in, as you say, unregulated environment is because the environment is such in quite a few jurisdictions, Latvian country being one of them. Even though our neighboring country, Lithuania, has crowdfunding regulation in place, I would rather say it's much more restrictive for market participants to develop. There are about 15 platforms in Lithuania, and they're in essence, they're quite stalling in their development. So I think the fact that there isn't a regulation in place, Jeff, you're also operating from a regulated market. You maybe comment on this later on. I'd be interested to hear. But basically, having no regulation doesn't mean that you're a dishonest market participant, and vice versa. So regulation doesn't really stop the bad players. But oftentimes regulation stops the development and development of good players. In our case, regulation is coming as for everyone in the European Union. Perhaps, Jeff, with the exception of you, since you're operating in the UK. because the law is coming, and the law is, as we will discuss, or you guys will discuss tomorrow, is quite a bit advanced. It's now in the commentary stage, so it should be implemented within a year or two at the national level. So the regulation is coming, that's inevitable, and we, as everyone else in Europe, are ready to embrace it.
Jeff, do you want to comment on it? What is your...
Yeah. So, regulation is one of these great sort of chicken and egg problems, because, I'm in general a believer in our sector, being regulated and having, a sort of clear and comprehensive regulatory framework. In large part, not necessarily because I think it substantively makes that much of a difference for bad, in terms of bad actors. I think you can do a lot through sort of internal codes of conduct, particularly in a space that is as transparent as online fundraising and investing. Excuse me. So it's less about the substance of it than it is about encouraging confidence in the market. I think it becomes much easier to persuade investors and to persuade businesses to work with you if there's a feeling that you're within a regulated space than if you sit outside regulation. That's historically, going back 100 years, that's always been the driver of financial regulation. It's not just about preventing fraud. It's about creating a robust market where people believe that they won't be the victims of fraud. And so it is about creating a good environment for business. The problem is that if you're trying to innovate, it's very difficult to often innovate within existing regulations, but you can't often persuade regulators to make any changes until you've shown enough growth and enough presence in the space. And I think, this was one of, even, pre the blockchain discussions, this was one of the challenges always within the European conversation, was that, the Commission in many ways wanted to see data to show that there was enough crowdfunding activity. And a lot of crowdfunding platforms were saying, well, we can't have this kind of activity until we have the right level of regulation. And I remember, and again, I won't stray too much into ECSP, but I remember at the beginning of the ECSP conversations, there was this slightly absurd, but understandable challenge where, there was a view of limiting or capping European crowdfunding at €1 million. And a number of us were saying, no, there's huge demand for more than €1 million. People were saying, well, show it to us. So we can't, because the rules currently make it very difficult to raise more than €1 million. So nobody's actually doing it. So I think what that transposes into the blockchain world and into any other form of innovation is that it's very difficult to sort of get enough traction to demonstrate to regulators the importance of the sector and of the importance of regulation to then get the regulation into place. But I think when it happens, as happened with ECSP, as is now happening in terms of blockchain regulation, I think that turns out to be a very, very beneficial thing. So that's a slightly long-winded way of saying I think regulation is very important in a space. I think getting it right is key to the growth of the industry and the growth of innovation, but at times it can also stifle innovation, and that's just a reality we have to deal with.
Thanks, Jeff. Armando, do you have any comments regarding regulation, its importance, and what you see there, how it can help our industry through mutual standards to grow?
Yes, actually, I was listening with the very interesting views of my colleagues, and I definitely endorse them. What is relevant from my side is that actually the path that we at the Commission we followed in order to arrive to the ECSP actually was quite. It's quite interesting, because actually we were coming, as I mentioned before, years ago from an industry which did not merit much attention because of its numbers to something that was progressively more interesting and deserved actually big attention. I remember from former Commissioner Barnier, who was the first one to have an interest in that. And now that we have in this, like in 2020, the year where ECSP is now effective, actually is now has been approved. actually, it's interesting to see how this could give a chance to provide more clarity for investors. So this is a perspective that, in my view, is interesting because independently now on the contents of the regulation, 5 million, all the different parts of it that I think will be discussed extensively Thursday. I think that having a pan-European one and overcoming the patchwork of member states regulation that in these years have been proliferating, actually something that could, and we'll see how the market adjusts to that, we'll see a sort of more clarity for investors that could indeed develop the industry even more. So I think I look forward to see what happens next year, and I think that next year we'll be here discussing and seeing the first outcomes, and it will be interesting to see how the market is starting to adjust to the regulation and see how the market will evolve according to that.
Thanks, Armando. Maybe audience, if you have any questions, again, FAQ, Q&A tab here below. If you have any specific questions, also comments, maybe regarding how it is in your market, how you perceive it, we'll be happy to hear your perspectives. Because one question which came up in this process of ECSP, where we are at the moment, it will be implemented 1st of November 21. We have now time to implement it into the member states framework to have clarity about what actually different regulations would mean, which were described in ECSP. What do you think about the understanding of usability, for example, for platforms, which we have seen in the past that sometimes certain frameworks or regulations maybe don't really adjust completely to what is actually expected and needed. Let's say, for example, language, the question of tests for investors instead of throwing warning signals all over the place, so that finance maybe becomes also a bit more exciting and approachable for people. Do you see there any shift in understanding what financial players also need on the other side? I mean, concrete, I mean really this thing about usability in this case. Do you feel that usability and how technology works and what there are the needs, that this is also taken into account in the legislation? Or is it something we now as an industry need to make sure that it will be implemented in a way that we don't, put our platforms full of only warning signals? Jeff, what do you think about it?
Yeah. No, look, it's a great question. In many ways, I think one of the great both sort of challenges and opportunities of platform operators, and certainly one of the things I've worked very closely on over these last 10 years is, how do you adapt a regulatory framework to work within a sort of internet age, dynamic. And I think we're in better shape with the ECSP than, certainly when we started in the UK, we were really trying to adapt pre-internet concepts, onto the platform, and things like the multiple warnings and how do you, and the screenings and all of that. How do you make that work from a usability perspective? I actually think is kind of a nifty, a nifty sort of challenge, and is part of the creativity that goes into developing a platform. I think the critical thing, though, then becomes the flexibility and understanding of the regulators who are responsible for overseeing and implementing this. Because as you say, if you have a sort of set of regulations in place, or if the technical rule sort of envisions an almost kind of like paper-based system, and a platform operator, is coming up with creative ways to make that usable online, what you can't then have is the regulator say, no, what we actually need is this form and then that form, and all of the things that are terribly unusable from an internet, from an online perspective. And so I think, like in many areas, I don't think this is the only area where sort of regulatory competition will take hold. But I think this is certainly one example of where it's going to be very interesting in the ECSP to see how different member state regulators approach some of these issues, and the extent to which you might see sort of competition among the regulators for approaches that work for platforms. And I can tell you, this is no great secret. I mean, as I said earlier, that we're looking forward to dual headquartering and picking a member state to operate in, and certainly coming from the UK, we can sort of choose wherever we like, and we're going to choose a member state where we think the regulator is going to make some of these more flexible decisions and adapt well to an internet-based platform. Over time, just as you see, the fund management world get drawn to Luxembourg and so forth, we might see one or two member states emerge as the sort of preferred, home states for crowdfunding platforms across Europe. And I think part of that will be driven by regulators' responses to things like, usability innovation. So I think it's going to be a very, very interesting set of developments over the next few years as different platforms come up with creative solutions to address these issues, and as the regulators respond to them.
Christin, let me chime in on this. Speaking of the regulation, although it's approved as a law, the European Securities and Markets Authority is still reviewing the most important part of this law, which is the technical implementation. So this is still under review, and we will be able to comment on it. And even though having the law is clearly something that everyone's been expecting, and indeed, Jeff, this is going to level out the playing field in Europe for all the regulators. So there shouldn't be no competition. That's the whole idea of this whole law. But the way each and every jurisdiction will implement the so-called ESMA's recommendations will be the most crucial part. And we don't know exactly the details. It's still in the review, and we will be able to comment, I hope, and we probably will within the framework of ECN as well.
But as you mentioned, Jeff, you expect that there will be still competition of member states and the way how they implement in the end ECSP, or what?
I think it may be less about the technical implementation, just in the sense that, as it says, ESMA and the Commission as well, I think we'll be looking fairly closely at the sort of specifics of how things are implemented, at least on paper. So I think, there may be some variety, and we know that a few points, including marketing rules, remain sort of at member state discretion. But I'm probably, I don't know that competition will emerge out of the technical setting. I think the technical setting are important. I agree completely, but I don't know the competition will emerge there. I think it's more a question of, over the following few years, how the regulators work in practice, how they work together with the platforms, the reputations they get in terms of being innovation friendly. And we already know that certain regulators like the AFM in the Netherlands, hold themselves out as fintech friendly, certain others like the BaFin a little less so. And, I think that we will see increasing divergence, let's say over the 2 to 3 years after implementation, between how regulators act. And I think that could potentially begin to influence platforms' decisions as to where they want to be based.
How do you see in general the work with the policymakers? I felt in the last years that they become more and more open-minded, and also a new generation of policymakers coming in, building a bridge maybe to the old way of doing things. Is this an opportunity to also have more transparent discussions in different forums to actually get there, to have this a clearer understanding about what is needed and what are the aims, for example?
I think absolutely, and I think you're absolutely right. I mean, what we have seen certainly over these last 10 years has been a sea change as some of the old folks move out and folks like Armando come into positions where we're having conversations. I mean, I think that at a policy level, we have found so much more receptivity and understanding of what we do and what we're trying to do, both in Brussels and in many member states. So that I'm highly encouraged by the direction of travel of many of these policy conversations. And as we went through the CSP process and met with the delegations from member states, it's often, not to be ageist about it, but it was often people in their 30s and 40s rather than 60s and 70s. It was people who understood and were relatively native to the internet and who were supportive of this. I think where it gets trickier is when policy hands over to supervision, because fundamentally, we're still in a period here where ESMA and ultimately the member states, are looking at how should this thing run. But ultimately, the rules will be set, and then it'll be handed to the supervision and enforcement departments of the regulators to run them, and that's how it should be. That's what the appropriate division. I'm not so sure that those divisions and those departments have modernized into quite the same degree, at least not uniformly. And I think what'll be very interesting will be to see how that handoff takes place, and to what extent some member states have had a huge amount of enthusiasm for the policy, but then once it comes to this sort of day in, day out of supervision and enforcement, they still revert to their old ways a bit. I don't know. I'm optimistic, and I hope we don't see that, but I think that's probably where we're likely to see the greatest divergence.
What do you think about it, Armando? The transition from policymaking to supervision? We're in a safe space here.
Can you hear me?
Yeah.
Can you hear me?
Yeah.
Yeah, I wanted to pick some aspects of discourse. It's quite interesting indeed, and we together with our colleagues in the GFISM have been trying to listen as much as possible. I remember that with ECN and Jeff and other colleagues who were participating in workshops as from 2013, I think, on, just to hear what the market was developing. And actually, to pick what Jeff said, indeed, I think that it's up to also to the Commission to monitor what will be the implementation of ECSP at member states level. That indeed, of course, the regulation is a compromise of the positions of the Council and the Parliament. So in a way, the level of control was also delegated more to the member states authority and a bit less to ESMA as proposed from the initial draft of the proposal. But I think that in the regulatory technical standards that would come up and in the implementation, I think we and in particular our colleagues of FISMA will try and monitor what would be the applications of the regulation in member states. And in the end, we would like to avoid too much gold plating, because in the end, the reason why we went for a pan-European regulation is precisely to avoid a situation where member states could compete with their own regulation and create a situation like I remember, like countries which had, for instance, a MiFID passport, then to, in principle, allow them to operate fully and freely across EU. Then they had to comply with the single requirements of regulations, because in the end, the member states were applying like specific duties to that precise member states. So it's in a way that led the Commission to uniform and regulate at pan-European level, and we will try, as Jeff mentioned, to monitor what will be the implementation at member states level of it.
Thanks for sharing. Should we maybe switch over to the topic of secondary markets, something which is a lot on our minds, the question of what's the advantages and disadvantages, and what maybe has also to be put into place in order to have the liquidity. There are different approaches here with you, Liza, and maybe you could share how you deal with it at the moment, and what are the next maybe where is it heading towards the importance of secondary markets in our field? Liza, you want to start?
Sure. So for us, just to repeat on this new generation type of development that we're bringing to the market, is related to the secondary market as well. By means of something called this tokenization or almost securitization, almost like the recent stage of exchange traded fund boom. This tokenization is presumably something which is going to be more and more something we'll be hearing more and more, I hope at least. But for us, it's something that we implement specifically with the view of the secondary market. There isn't any need, as Jeff will comment, on the secondary market to operate as using perhaps a special purpose vehicle. You know, a swap platform can be worked out within a closed book. But for us, we see that the future going more towards a transparent exchange. So we see even securities, although they will be supervised by this one transfer agent or one central counterparty, the idea is that people will be able to basically have in their digital wallets as much as their cryptocurrencies and also probably digital euros, also their securities, and they should be able to also exchange amongst themselves, swap them as they feel, as they like. In fact, an OECD report at one point suggested that there are several advantages that they would like retail public to actually have more access to, and one of them is direct access to primary and secondary markets. So we are living in this time and day when retail participants are becoming more and more empowered. And one way of empowering them is giving access and giving the tools, the technical tools, to manage their own finances, so that the banking system becomes perhaps less relevant, but rather the peer-to-peer system becomes more relevant. So that the closed book systems of centralized exchanges becomes less relevant, rather than perhaps transfer agencies and open blockchain systems become more relevant. And so that people who own something can exchange amongst themselves, obviously including all the AML KYC requirements for securities, but not for utilities, so much at least. So people should have these tools, and that's where we see our purpose, giving these futuristic perhaps tools today, because obviously we can do without them. Not that there isn't that much literacy in this space yet, but for the next 5 to 10 years, I think we'll see an enormous development in the abilities for people to manage their own finances. So that, as I repeat, the banks will become less relevant, the brokers will become less relevant, and people will learn and gladly manage their finances within their own, mobile devices.
Thanks, Liza. Jeff, do you have any comments from your perspective?
Yeah, I guess I would just say two things about secondaries. One is that, again, from a kind of regulatory perspective, it gets very interesting, and the in the ECSP conversations, one of the things, this was an area that I think caused a degree of tension, even though it's only a small bit of the regulation, because at one level, I think there's widespread recognition that secondaries are good for the market, that being able to give, in an otherwise illiquid private asset class, being able to give investors, at least theoretically, the opportunity to sell early and for new participants to come in at that stage of business growth is a good thing, and it's something we want. At the same time, there's a great concern about sort of regulatory arbitrage, and just generally the fact that, the multilateral trading facility rules that exist in Europe are there for a reason. They impose pretty significant burdens, basically burdens that are too high for most, I think, crowdfunding platforms to work with for a variety of reasons. And I know there's a strong desire that whatever kind of secondary platform, is offered in crowdfunding, it doesn't trigger the MTF rules. So you've got this tension, and so you wind up with this sort of slightly strained bulletin board concept that both has been adopted in ECSP, but I think is becoming increasingly the sort of the way that secondaries secondaries are being handled in this space, and it's suboptimal. I mean, you know, we would love to be able to do more. We'd love to be able to match buyers and sellers more closely, you know, but there's a little bit of a just sticking point here around, you know, making sure that we're not an MTF and keeping crowdfunding bulletin boards separate from MTFs. And I think that's an issue that, as secondaries get bigger and as platforms wind up becoming more and more active in the space, I think this is an issue that'll come to a head in the next few years, and we'll probably need to find some sort of a creative regulatory solution. So that's the regulatory side. I think on the substantive side, what I would say is, you know, we launched at Seedrs, we launched our secondary platform in 2017. And, you know, I am the first to say that I was skeptical. I mean, I led the implementation of it. I led us to do it. But at the same time, I didn't really think this was going to become a huge thing. Not because I thought there was any lack of sellers. I knew plenty of people would love to be able to sell shares sort of pre-company exit. But I really wondered about buyers. It's hard in an illiquid market to maintain buy-side liquidity. You know, it's hard enough to get everybody in a primary campaign sort of together at the same time. And there you have the business involved and engaged in providing information. Ongoing secondaries are challenging for buyers. And so I really was worried that we kind of launch it and there would just be the tumbleweed sort of going by. And it's, you know, it's been a surprise and a delight that there's been a huge amount of interest in our secondary market. We see a lot of activity. We continue to iterate and expand on it. We just introduced full dynamic pricing in our most recent trading cycle. We do 1 week a month trading cycles to help sort of consolidate the liquidity at least a little bit. And you know, there is clearly strong interest even from buyers. And I found that very encouraging, and that has led me to the view certainly that, you know, the potential for further growth in the secondary space is maybe significantly greater than I would have thought 3 or 4 years ago.
What is the take from the project side? Because a lot of companies actually enjoy to be private and don't be on the market. How we believe that investors all want to sell one day, but I also see that there are investors who are actually not so excited about the volatility and the ups and downs, and actually maybe sometimes happy to know I put my money in a good project, they work with it, and then I get my return later. I mean, there's so many different models in our industry to say, but how about, I mean, is it really such a desire, and what are maybe also the obstacles for the projects to be on the secondary market so early on, especially as
I mean, it's a great question. And when we launched our secondary market in 2017, this was the thing I was the most nervous about. I knew, you know, in terms of potential backlash, I knew, you know, investors would either use it or wouldn't. But there were no investor was going to mind it being there. But were the projects going to be concerned about it? And so we wrote to all of our portfolio companies, and we use a nominee structure at Seedrs, so we've got ongoing relationships with all the businesses. We wrote to them and said, you know, look, here's what we're planning to do. Here's why we think it is a good thing for you. But if you really want to opt out, you're welcome to opt out. And almost nobody took us up. 2 or 3 companies opted out. Almost everybody else was happy to be there. And I think there are a couple of reasons for that. I mean, I think one is that, you know, nobody really wants, you know, unhappy investors in their business. And, you know, if you have people who want to get out and other people who want to get in, you probably want to let that trade happen. Like it's probably going to be better for your life in terms of pressure, in terms of, you know, any number of potential, you know, in terms of any number of potential kind of, you know, just aspects of shareholder management. You really want to let that happen. So I think people are pretty happy with that. I think that, you know, one of the reasons that private companies, probably the biggest reason that private companies want to be private, is the burdens of information sharing that fall on a public company. And that's not just a question of, you know, needing, you know, not just a question of needing to disclose more than you might like to. It's a question of the amount of work involved. It's a question of making sure everybody has the same information at the same time. And, you know, because a bulletin board in a private market doesn't require that. We're not requiring companies to do any more updating than they already were for their investors. I think the companies were fairly well contented with it. So we've had a pretty good reaction. I think it requires some education, and I think there will always be some founders who are a little bit nervous about it. And, you know, it does require education to say, look, you know, just because somebody wants to sell doesn't mean they don't believe in you. That doesn't mean it's a bad thing. It means that, you know, they want to realize what they can from this investment now. Somebody else wants to come in. You're going to have a happier base of shareholders, and you don't have to do anything different than you are already doing. And so, you know, it has to be managed, but so far the reactions we've had have been pretty good.
Liza, do you have any take on that?
Yeah, Christin, since from my experience in both fund management and also building and operating a cryptocurrency exchange, so an exchange, effectively a full-fledged exchange, I can say that liquidity, Jeff, is always a problem on the buy side. I mean, always. That's why you have these regulated market participants who are acting as the market makers. But obviously, when you hit that sweet spot and you have both the buyers and the sellers, you obviously want to make your investors happy and, as you say, allow that exchange to happen. So that's the whole reason for the secondary market. You want to search for that liquidity, even though at the beginning you're most likely to have only one part of the deal being visible. But at some point, if you don't allow it at all, you will never know whether there is market or not. So you have to take that risk and allow the specific security to trade, because eventually there will be also a demand for it. Now, with the second aspect of allowing secondary market to operate is basically education of the investment community. So the investor community gets to be educated only by having these abilities to exchange freely. And before someone puts their money into something, they're obviously going to take time and investigate what is the company that they're investing in. Does it deserve their attention, their vote, their money after all? So with this, we are basically increasing the literacy of financial investment as such, and I think that's an absolute must. And I see why OECD report says that we should promote retail access to investment opportunities, both in primary and in secondary market.
What you're saying, Liza, is that actually by giving them the opportunity to participate and to make their own also experience, through this they gain knowledge and become more literate. Because the question is, I mean, where do they receive the information from? And we have recurring situation where people, retail investors, maybe burn their hands because there wasn't the experience yet. And instead of maybe saying, okay, sometimes you have to learn hard, but move on and become better in it. And the regulator, for example, is always then getting crazy about protection, which is very important. But where do we find the balance? Because it feels that people, once they're burned in finance, often don't go back to it for quite a while. So how do we create a smoother process? And how can we maybe use also gamification in a way of making it more fun and entertaining without burning your hands straight away? Do you have any specific mechanisms you're implying or approaches when it comes to education?
So I think the regulator has been drawing the line pretty well thus far by, first of all, allowing the crowdfunding to happen itself, even though it was started back in 2009 with Indiegogo and Kickstarter. They actually operated in an unregulated space for something like 3 years. So first of all, regulator has been lenient and has been allowing these experiments to happen for a long time, and they have defined quite clearly, for instance, what information needs to be disclosed to the investment community for that offering to be legitimate. And it is our task, the platforms that operate these offerings that allow them to be visible. It is our task to vet properly these companies and make sure that the wording is simple enough, yet disclosing as per the regulatory guidelines, but is simple enough for people at the retail level to understand and grasp what they are buying or selling into. So that fine line has been drawn, I think, quite successfully. The most important thing is not to overdo and not overcomplicate both the requirements, especially KYC AML requirements, and on the platform level, not to overcomplicate the wording. So it's a learning opportunity for all participants, but I would stress it's the most useful learning opportunity for the investing community to actually start making their first mistakes, because obviously humans don't learn but from their mistakes, and we have to somehow give that opportunity to be optimally disclosing the information and simple enough for it to be actually understandable. But you cannot create market without allowing the market to happen in the first place. So we need to have that market for both the startups and the investment basic projects looking for investment to have the ability to find it, and for investing community to have the ability to judge on an open market situation whether this or that opportunity is worth their money, their time. That's how you create market, and we're here to create that market, hopefully with new tools and new opportunities for a wider world to participate, not only in the European segment, but also wider world.
Yeah, it's very exciting to see the opportunities which lie ahead when people actually are participating and bringing in more private capital into the markets and give more companies a chance to grow. Matthias, you joined us. Welcome after a marathon of technological challenges. Do you want to add, before we come to the first questions from the audience, because we have 2 questions, do you have any something to add from your side? I'm not sure if we have the time for your presentation, but maybe you want to highlight some of the points you wanted to share with us.
Yes, first of all, apologies. We tried everything. We're now back in the stream. I could actually follow the discussion, but not participate. It was the most frustrating experience you can imagine. So I will not interrupt the flow of discussion, really just picking up on the point regarding education that Liza mentioned. Transparency is very important, but also standardization of available information, even for sophisticated investors. If across platforms there's not a standard format to talk about returns in different settings, I think that can be a challenge. Education, and I think I'm really here speaking with my ECN hat on, has always been our strategic aim, because it's very important that investors have as best an understanding of the various vehicles as is possible. And I think there is a good deal to run into the market regarding education. We've got sophisticated investors, but that doesn't mean that that is the only market for crowdfunding. With a bit of effort and with a bit of transparency around the products and vehicles that are available, I think the market for crowdfunding can be considerably wider than that, but it requires education on investment opportunities. If one looks at the most recent OECD study regarding financial literacy, across the board, I think about 50% of the market are at the moment sufficiently financially literate to participate in crowdfunding. I would say that could go up to 67% across the European Union, the European economic areas, if all players in the market play a role. I mean, platforms are destined to play an educational role when it comes to financial literacy. So I think that's an incredibly important message.
What is your take, Matthias, on the different markets in Europe? There are some countries which are very active. We know also from the mindset, the Dutch and UK, there are certain mentalities, there are certain markets, especially maybe Eastern Europe, where they're not yet so access to finance is not really yet there, and there's a lot of potential for ECSP to also support these underserved markets by having clear standards and the platforms there to operate under a regime. Do you see any specific activities, developments, maybe also in the last years in certain regions in Europe, just to maybe cross here a little bit the bridge also between the different market participants, as we have also a very diverse group of audience today from all over Europe?
What I might do is just share a single slide for my presentation, because what I've done, it's customary for me once a year when CrowdCon comes up to go through the various reports that have been published and really just give the industry a flavor of the most recent results. And what really struck me, and let me just try to bring up this one slide, if I may. I will try to share my screen and hopefully that should work. So I'm trying to bring up a screen. Let me just put that on. I had to work from a laptop that I'm not familiar with, but I think I will. Yes, hopefully you can see that slide now. It is a slide that shows you industry growth just over the last 3 years that we have data available. There is a narrative that over the last 6-7 years has taken hold that the UK is the most developed market and that continental Europe is trailing. Now across the board, that has actually changed quite significantly. And this particular slide where I've drawn all the various geographies in Europe together actually illustrates that. If you start from 2016 on the left-hand side, these are all crowdfunding platforms and vehicles. You see that the UK has a 78% market share, and that was really at the back of our minds, that was the most significant market. And over the last 2 years, what has happened is that the continental share has doubled. In relative terms, the UK share is still very strong, of course. The UK market remains dominant, but it's at 60%, and we have the northwest, geographically speaking, of Europe, the Nordics, the Benelux countries, Germany and France, developing quite strongly, and between themselves having the remaining 40% almost of the market, and with quite significant growth. There's a very interesting northwestern geography developing now on the continent, or continental Europe, and that goes all the way, don't forget, that goes all the way up to Iceland as well. And what is very interesting, to tie that back into the point regarding education that I was trying to make, if you try to map these northwestern emphasis geographically of the best developed crowdfunding markets when it comes to platforms, when it comes to trading volume, if you map that onto financial literacy, it doesn't map onto that. You actually find that levels of financial literacy in the Northeast are just as high almost. So I think and that is quite curious. Then why is it that platforms are not well developed? And that is really where regulatory harmonization we can expect to make a difference there, because the retail markets, the retail investors in principle are ready for these kinds of products. The platforms, I think, should find open doors that they can move into. And I listened very carefully to Jeff's strategic statements regarding his perspective onto the continental market. I think we will see quite a lot of very interesting dynamics coming to the fore now with the new regulation being envisaged and taking hold from September next year. So I will now try to.
Somebody want to comment on it, on the market development, and maybe also the question of market consolidation and increasing the market sizes by the cross-border activities? So we will get more together. I mean, will there be, Jeff, what do you think, what countries will maybe come up in the future? Are you already looking at Eastern Europe, or do you see a stronger participation there coming up? Or are there any changes over the last years in markets you see where it's more happening on your side?
Is that a question to me?
Yes.
Oh, yeah. Look, I mean, I think Matthias's sort of map of where we're seeing a lot of activities is certainly consistent with a lot of what we've seen. I mean, I think one of the issues, one of the big issues I think that we've kind of observed has been that if you although cross-border crowdfunding is the ultimate goal, to get a sort of momentum moving, you do need both investors and businesses in a given country, enough of each to really sort of fund a little bit of a domestic level of activity, to form a bit of a core. And so I think the places where we have found businesses thriving or crowdfunding thriving have tended to be those markets, like the Nordics and like parts of sort of, Northwestern Europe, where you both have a rich entrepreneurial ecosystem and also a rich environment of investors. The problem we found in Eastern Europe has been that although there are some amazing entrepreneurs, getting enough capital moving has been tough. And I mean, I often tell the story, and it's a slightly odd one, but I think it was very illuminating for me. And years ago, I was visiting with some entrepreneurs in Zagreb, and we're talking about the Croatian environment, great startups coming out of Croatia, very low cost of labor and great opportunities and everything there. And they were saying our real problem is raising money. We really, there aren't people who can invest in us here. And I was explaining, well, this is where crowdfunding. You don't really need people who got a lot of money. You just need people who can invest 100 euros. And, the very disheartening response from one of them is, well, we don't really know people who can invest 100 euros. And if you've got that, if that's the dynamic, as much as we're trying to democratize and open up as much as we possibly can, I mean, if you don't have a critical mass of people who can even invest at that level, I think you struggle. And I think that, certainly Southeastern Europe, and to a lesser extent, other parts of Eastern Europe, suffer from that a little bit. So I do think there's some markets where you don't have enough of a match yet in terms of both capital and startup activity. But I do think certainly we feel that, the Nordics, Germany, France, most of Western Europe, we've seen a lot of activity in Portugal. There's a lot going on in Spain. In Italy, the problem, I think, has more been the entrepreneurial side, the entrepreneur side. I think there's plenty of capital, plenty of potential investors. I think there's just been some structural limitations in really building out the entrepreneur ecosystem there. But I think, I'm bullish on much of Western and Northern Europe, but I think Eastern Europe will come.
Liza, what do you think when you are operating so global, the activity of investors, they're coming from all over the world in the project as well? Do you see any specific match between where the project is from and where the investors are from, or is it just all over the place?
So there are several issues with investment across the European nations, member states. First of all, with the existing laws in place, as you know, there have been national laws in place, which we had to observe. And specifically, Jeff, in Italy, it's quite stringent that the project needs to be Italian and the investors need to be Italian. So there's no way out. So it's very domesticated and very limited market. And that has been the case for almost all member states. With the new law coming in, the idea is, and the hope is obviously, is that both the projects and investors will be able to be pan-European. So not only it's going to level out the playing field for the platforms, it's also going to level field for the investors. So we will be able to look across the border within the European Union at least and invest in good projects. And in that sense, arbitrage good opportunities, because obviously the labor cost, the level of education and entrepreneurial spirit does differ across these jurisdictions, because some of them are more welcoming and some of them are perhaps less welcoming. We are not investing in nations, in nationalities. We're investing in projects, and it doesn't really matter. It shouldn't matter, at least, where they're based or where the investor is based, as long as it's clearly stated and we understand which laws we're abiding by. Now, in terms of going beyond the European Union, that is definitely my personal goal, and hope that the new regulation will not curb this effort, and it will be possible for Asian countries and Latin American countries investors to actually participate in European projects. It is most likely that we will be sourcing our projects in Europe, but we definitely want to see this cryptocurrency aspect to serve as in Europe as foreign direct investment vehicle. So we want to see increased capital flows, specifically using cryptocurrencies from other nations, from third nations from outside of Europe.
So exciting, so many questions which would come up in my mind. Let me switch to the Q&A so we don't forget it before we have to wrap up very soon. If you have any other questions, please raise it here, guys, in the audience. So Louise asked, do you see digital assets opening way for incorporating institutional models in structured finance, for example, junior, senior investment structures into crowdfunding offerings, for example, yield tokens and yield tokens? I guess these are maybe some question for you. Do you want to comment on it?
Certainly, Christin. So here's the thing. There should always be a separation between small capital investments and larger capital investments, which is why we've been operating within the scope of also now crowdfunding law, which is up to 8 million, and which is beyond where the prospectus law is enforced. So although I'm tempted to say, yes, it would be a great idea, absolutely, let's open up all the possibilities for everyone, whatever the amounts, whatever the structures, we need to understand that small capital investment for retail should be as simple as possible, and it shouldn't involve structured products. There may be some complications to an offering. For instance, I don't know, MS9 loan, which could be converted from a loan into an equity, but it shouldn't be structured to the point where the investor is unable to understand what he or she is buying. So my commentary and answer to this question would be possibly yes, but only at a certain different regulatory level. In crowdfunding, I would say rather no.
Thanks, Lisa. Armando, maybe for you is a question from Claudio Lator. Consolidation in secondary market are definitely going to fuel market growth, great opportunity for startups and SMEs. The risk of frauds like insider trading so becomes higher and higher. What is your view on ways to reduce the risk, avoiding to regulate and slow down processes too much? Armando, do you have any comments on this? Maybe it's quite, oh, your tone is switched off. Now.
Can you hear me? Yes, I find these questions quite relevant because actually, on top of what was said about the secondary market, I think that indeed it's a very important development. Actually, the cycle of crowdfunding is like we were waiting years ago about the maturity of the cycle. That was at the beginning was of course the initial market, but now we are seeing that and the secondary markets are indeed the questions that some of us already asked a few years ago. Say what about people want to sell so the stakes. So now we're seeing that these markets are starting to appear, and Seedrs is one example. But the question from the gentleman is indeed very relevant: how to avoid frauds, how to avoid issues. Indeed, I think that more data transparency and standardization of information is key here. I think that the more the secondary markets appear, the more they develop, the more there is a need for more data transparency, for standardization of data, so that and also comparability, so that basically projects could be compared, investors could have more clarity, and also I think in a way it's a process that will feed it in itself. I mean, there is of course a need for regulators to take a view on that, but it's also for the market. I remember that at the beginning there was a lot of self-regulation, there was a lot of disclaimers, especially, for instance, from the UK peer-to-peer associations, where there was a lot of work in order to standardize data. I think to avoid and to minimize at least these kind of issues, I think data transparency is key, is the most important leverage that could help.
It's an interesting point, because we actually have the problem at the moment in the market that there's no real standard data resource where we really have a full overview, right? There are some interesting reports and gatherings of data, but it's not so sufficient that we really can operate with this as well. But here's we are going now already to the final round to maybe share what do we think are the most growth drivers in the next years to come. What are maybe our wishes to policymakers? If you want to share anything, any specific message. We didn't tackle so much sustainability. We didn't tackle so much co-matching. There are a lot of best practices and great reports out there. Also, the impact of COVID. I think that in the next 2 days we will also touch base different topics. But, there's a lot of more to come, and we in ECN also will try to create more space for very niche and specific topics, so everybody will find their theme of interest. But as we have just a couple of minutes left, maybe we can do this final round. Matthias, do you have anything to share from your data before we let every panelist have their final goodbye message?
In terms of data, or do you want me to make that my final statement?
Yeah, you can do my final statement. Yeah.
What I would say, and without trying to spend time on bringing up another slide or two, the question of secondary markets is, of course, organized markets in addition to what the platforms do. And the question is that a natural trajectory of development or not? When we look at the crowdfunding sector overall, I think we've got these strange attractors that surround the sector. We've got the banks and the challenger banks on the one hand, and I think there are the strange attractors for the lending platforms because core business is very similar. We have for the equity platforms, we've got the whole venture capital, the wealth sector. Angel investors are becoming more organized, and there's very interesting crossover where angels are moving onto platforms like Crowdcube and Seedrs and becoming more IT literate, but only to some extent. Challenger markets, that's a strange attractor for equity crowdfunding platforms. And there are these hybrids then and different vehicles. The innovation ecosystem, if you like, we talk about the growth economy. The moment the green economy becomes the growth economy, then of course the whole crowdfunding sector becomes a vehicle to support the growth economy when it comes to greening our societies and to have energy transitions and all these kinds of things. And that's where really citizen participation becomes an even more pressing issue. The wealth industry traditionally is not very inclusive. And the drivers towards opening the financial sector are really the crowdfunding platforms in their various guises. And the more inclusive the financial system could be, the more those platforms will need to open up hitherto quite closed off areas such as private equity, which only now have come into the reach of more retail investors. That's probably as far as I would take it for now, Christin.
Okay, that's exciting. What is your vision of the future for our industry?
Oh my goodness! No, look, I'm a huge optimist, and I'm very bullish, and I really do think that the opening up of pan-European crowdfunding is just a momentous moment that we will look back on as seeing, as having been one of the great one of the great enablers the space. I think as US regulations and all loosen as well, or improve as well, I think that'll help too. But really, I think the next 10 years, as I say, I think there are going to be a lot of innovations. I think there's going to be a lot of, whether it's around blockchain, whether it's around secondary markets, whether it's new models. I think that's all very exciting. But I'm also, maybe just out of war weariness, having sort of fought the innovation battle, for in early years, I'm now excited about the growth. I'm now excited about this really becoming a critical part of the SME sort of funding ecosystem, all across Europe. So I'm very optimistic. And I'll also take this opportunity to say thank you to everybody. I'm going to have to run because I've got to hop onto another call. But this has been a great discussion. I've learned a lot, and thanks to all the attendees. Cheers.
That's you, Liza. Yeah.
Well, I'm extremely excited about this whole industry. Having my own experience within the ICO space, where for the previous project we raised 10 million within 24 hours. It's been a revolutionary sort of experience, to say the least, to see how retail investors actually potentially an enormous force of humanity to build good projects to propel them forward. And I would only wish for ESMA to weigh very carefully the technical aspects of how we, the platforms, should be implementing technically the new law, so that it becomes, and it still is, inclusive and allows everyone democratically to access good opportunities for both primary and secondary markets. Thank you very much for having me here.
Beautiful, thank you. Armando, what do you think? You have the final speech of the day.
I'm very optimistic about the future. I think that putting that into perspective, the overall situation, hopefully next year we will come out of the pandemic, and there will be a lot of enthusiasm around also in the economy. I think that more money could be channeled finally of the liquidity that is stuck now could be back into the economy. And I think that together with the regulatory changes, but also the market developments that we've seen today, secondary markets, the consolidation in the market, we can see a start of a new decade, which is really interesting and full of enthusiasm. So I really think that next year we'll be here again discussing again of new developments and seeing how the market has coped with the exit of this pandemic, and how the new regulation will have brought new dynamics into the market.
Exciting. Thank you, Armando. Oliver, do you want to say anything for the next 2 days? So when we wrap up, because we will dive deeper tomorrow, cryptocurrencies and Mika, and on Thursday, ECSP. So there is a chance to dive deeper into the specific topics. And we are also very excited to discuss with all of you in the future of the different networks in ECN. And also please subscribe to the newsletter if you are not on it at the moment, because you will all the updates from the working groups also. And Oliver, as I can't see you, I guess you trust me to say goodbye to everybody, and to say thank you also to ECN for the work you did in the last years, and everybody of you who is interested in support the ecosystem to move forward and to understand better and to build the future. And yeah, we will. Oh, Oliver, there you are.
Yes, I'm here. But thank you for closing. I didn't want to say anything, just that for the people in the Zoom call, we will send out a link for tomorrow's session. And then we do it again, and tomorrow every speaker will be there in the beginning. We've briefed them already so that they don't get kicked out like Matthias today. Thank you very much for your insightful discussions, all of you. As always, we try to focus on content rather than on flashy design. I think we didn't deliver flashy stuff, but the content was really good, and I think you did a really great job in managing to set the stage for the discussions tomorrow. Just so that we maybe bring this up tomorrow, we talk about MiCA, that's the crypto asset proposal or the regulation for crypto assets in the European Union by the Commission, which then go to the Parliament and the Council. We will have Michael Huertas from Dentons, Nathan Kaiser from Six Digital Exchange Switzerland, Greta Gaumann from Exporo, Ivona Skultetova from our organization ECN, and of course Hagen Weiss from the German Ministry of Finance, who will discuss the proposal, the potential impact on the market, following up from what we heard today from Liza and also Jeff, when they discuss their views as a market practitioner, as we will see here. Maybe some more legal discussion than is good for anyone. And on Thursday, we have our third session, and there will be a separate link as well on ECSP, so the regulation that we also discussed here today on crowdfunding, and the next steps from the legal text that we have now to what, of course, will be decided in the member states, which we don't know, but you know what we can expect maybe. And we will have a keynote from Diego Valiante from the European Commission, DG FISMA, Defendirat from the French market authorities. Jeff Lynn again will join us, and Pascal Ouvra from October. Both have been working very closely in the process of designing ECSP as providing input to the European Commission and the other institutions. And Umberto Piatelli from Osborne Clark, who works with us very closely in Italy. So I think we will have an interesting discussion then as well. So everyone who's in the call, you will receive an email. Thank you very much for joining. For the panel, for the panelists, thank you. For the participants, more questions, please. I think there is the option on the bottom. I thought you would interact a bit more. Thank you very much.
Thank you, everybody. Bye. See you tomorrow.
Bye.
Bye.